Thanks so much for joining our webinar series, DLT and Blockchain in the Real World. We created this series to highlight how Hedera is being used in production with a number of new and existing applications with real users solving real problems. And in our past webinars, we've learned a lot about a variety of different companies across a bunch of different industries in healthcare, agriculture, advertising, tokenization, a number of different industries there. And these were, in the past, a lot of them were revolving around solving data integrity issues. So, COVID-19 vaccine tracking, for example. And some of the latest webinars that we've been doing, just like the one that we're going to be doing today with Jeff and Scott, are around tokenization. And you can check out all of these past webinars on our YouTube channel. So as mentioned in today's webinar, we're going to be learning a bit about how Hedera is used for the project TOKO, which was created by DLA Piper. And TOKO allows for tokenizing assets using non-fungible tokens with both the Hedera token service and the Hedera consensus service combined with Hyperledger Fabric using an integration that we have. So my name is Brady. I'm on the team at Hedera here. And we've got Scott Thiel, who's a partner at DLA Piper, and Jeff Tchui, who's joining us today. He's a partner at BCW Group, who helped build TOKO. And they're going to be talking about their usage of HCS and HTS. And so since we have a number of new folks that are joining for this webinar today, I'm going to take a couple minutes at the beginning to get everyone up to speed on Hedera's network and consensus mechanism, primary network services, and then I'll pass things over to Jeff and Scott. And Jeff and Scott are going to be talking a little bit about how Hedera is used in production, offer some insights on their architecture, and some screenshots of the platform. So as mentioned in the chat, we've got some time at the end for a Q&A session. So please be sure to use the Q&A specific box, not the chat box, and drop your questions in there, and we'll go ahead and answer them at the end. They can be Hedera related, I'll answer those, or TOKO related for Jeff and Scott. We expect the event today to be around 30 to 45 minutes long, but just depends on how many questions are there at the end and what people are interested in learning about. So let's get started. We're gonna kick things off with a quick overview of the Hedera ecosystem. In this slide, we've got Hashgraph consensus, which underlies the Hedera network. It's the consensus algorithm that was created by our chief scientist, Lehman Baird. Then above that, the primary token and consensus services with which application developers are building tokenization engines and data integrity related applications. And they're accessing those services using SDKs in Java, JavaScript, and Go. The code base for the Hedera network and its services are governed by the Hedera Governing Council, which we'll get to in just a minute. And then there's a number of different types of third-party applications that are built on top of the network. So data integrity, tokenization, decentralized identity, a number of different types of applications that we're starting to see come to fruition. Tokenization being one of them that we'll learn about today. So as mentioned, the underlying consensus algorithm for Hedera is Hashgraph, and Hashgraph offers a significant amount of efficiency over blockchain networks. One of the big differentiators for Hedera is it overcomes these limitations that you see in Ethereum and other blockchain related networks. So things like fluctuations in transaction fees that impede stability, or a low amount of scalability or slow performance that limit the adoption of enterprises and other types of applications. There's also this idea of a threat of a network forking. So when it comes to tokenization specifically, if you mint tokens on a network that forks, the application developers as well as the end users have to figure out which token is the source of truth. You have two cryptocurrencies for these two different networks. You have two tokens that exist now. And so it adds a lot of complexity. Hedera is a no fork network, so that cannot happen on Hedera. It adds to the stability significantly. So we're going to be learning a little bit about the Hedera token service today and how it's used. And there's 5 specific things that we found in building out this token service that really differentiate it from other tokenization offerings out in the market. And so the first being compliance that's built in. So there's configurations with HTS that are used, such as KYC verification, account freezes, token supply management, things of that nature that are built right in that make it really easy for enterprise organizations that are building tokenization platforms to implement and be above board when it comes to regulation. There's configurable behaviors. So tokens deployed on HTS offer things like native atomic swaps or scheduled transactions, which is a feature that's going to be coming out within the next few weeks. So it's this configurability that exists similar to a smart contract, but it's all done natively. There's low and predictable fees. So in the same way that you send HBAR on the network and it costs fractions of a penny for any sum that's sent, that same low fee and consistent fee is also available for tokens that are minted on Hedera using HTS. There's built-in governance. So when it comes to governance of the network, we have our 39 council members, one of which is DLA Piper, who obviously we'll be hearing from today. They make decisions, they bring stability to the network. They're fully decentralized. They run nodes on the network until the network becomes permissionless. And then native tokens. So there's no need for slow or expensive and potentially faulty smart contracts. All the tokens using Hedera token service are native to the Hedera network. With the Hedera token service, there was a creation of an entire ecosystem. We went around and spoke with token issuers and exchanges and standards boards, explorers, wallets and custody providers, and everyone has started to build this ecosystem around tokens that are created on Hedera. So developers who are starting to build can have confidence that there's an ecosystem there waiting for them. And then quickly want to talk a little bit about enabling enterprises to access public networks. So as we'll learn today, TOKO has a hybrid architecture between Hyperledger Fabric and Hedera Hashgraph, and it utilizes the Hedera consensus service as an orderer and essentially an audit log. And so with the combination of private and public, you reap the benefits of, from the private side, privacy, customization, encryption, things like identity management. And then on the public side, trust, availability, finality, and performance. And you get the best of both with these two. And I'm excited to learn a little bit from Scott and Jeff about how they're utilizing that Hyperledger Fabric integration and what kinds of benefits that brings to the TOKO platform. And then to finish things off here, just to round out our full ecosystem, we have the Hedera Governing Council. So these are 39 leading global organizations. They're term limited. They're across a variety of different industries, and they're even decentralized across time. So there's 3-year maximum terms with up to 2 consecutive term limits. The first initial members were selected by Swirlds Incorporated, which was the first governing council member. And there's a committee on the governing council to find new replacements for these folks. Each member of the governing council actually owns a piece of Hedera Hashgraph LLC and has an equal vote in decision making. And they also run the initial network nodes until the network is a fully permissionless network. These are some of the members. Most recent one was Standard Bank that just joined a few weeks back. And that's it for the introduction to Hedera. Would love to pass things off now to Scott and Jeff. Oh, I think you guys
Thanks, Brady. Just checking we're off mute.
Great. Thanks for the introduction, Brady. I think Scott can kick things off.
Thanks very much. So welcome everybody. Fantastic to be here today talking to you about what we're doing and how we're leveraging the Hedera components in bringing efficiencies to capital markets and creating digital assets and the future of finance. Just about DLA Piper. Next slide. If quick introduction. So DLA Piper, as Brady mentioned, is already a member of the Hedera Council. We've been involved with Hedera for at least 3 or 4 years now. We kicked the tires on the technology way back when, and some of the things we're going to be talking about today were really the vision around what we saw with this technology and the opportunity to leverage it in enterprise use cases, and tokenization is obviously one of those. For those who don't know, DLA Piper is a global law firm. We're in 40+ countries, 90 offices, one of the largest law firms in the world. As we move into, and I've seen one of the questions already, we move into real-world digitization of real-world assets and fractionalization of those through tokens. We do get into a level of complexity around securities law regulation, financial services regulation. This is why, this is part of the reason why a law firm is in fact, pioneering the development of a fully compliant tokenization solution and ecosystem, leveraging world's best technology that's going to meet those requirements. Jeff, perhaps you could just touch on the BCW role with the TOKO builder.
Sure. Well, I'm Jeff. I'm a partner over at BCW. So we actually look at more of a strategic relationship with DLA Piper and TOKO. We do project management and look at the program, also design the system in terms of the infrastructure as well as the front end, and then really helping DLA Piper understand what the business opportunity is from the actual industry and the market. And then really combining asset tokenization with the technology, specifically with Hedera, and how to best utilize the features and functions. We're actually a two-group team. It's BCW and RSI that we work together with DLA Piper, look at their systems, really built the core out of the Hyperledger Fabric backend in conjunction with HTS integration, and then all of the various different token standards from HTS to Ethereum, and also a few other different standards. So really excited to talk about how we've actually brought all these different pieces together, talk a little bit about the design and ecosystem, and then how we can move forward to actually tokenizing world assets.
Right. So just a quick overview of what we're seeing. We launched TOKO in, it was November of last year at the Hong Kong Blockchain Week. And since then, we've had a pipeline of deals that are appearing. One of the things that's, I think, been quite interesting is the diversity of underlying asset classes. And some of the key ones we've seen, including, art, fine art, real estate, insurance or reinsurance products, equities or, shares, particularly early venture sort of shares and investing, funds and the digitization of funds, debts, debt instruments, revenue streams. ESG is a real feature of a lot of the conversations we're having. And then bundles of intellectual property rights, whether they are music or digital artworks or intellectual property assets like trademarks, patents, copyrights, etc. So a real mix of asset classes. And there's at this point in time, there's really no limit to the level of what could be digitized using TOKO and using digital assets. So another project we're working on involves subsea mineral deposits, for example, and the tokenization of future interests in the extraction of those rights. So there is a huge diversity of what we've actually been already working on, and that's really exciting as we look to develop this sort of alternative asset marketplace and take some existing asset classes and create new and interesting products. As a global law firm, we do have the ability to support clients on a multi-jurisdictional and global basis. So we're working on projects in a huge range of markets, UK, mainland Europe, the Middle East, Asia, particularly Hong Kong and Singapore, and Australia is just starting to come online as well. And then obviously the US and Canada as well. I'm just one of my early calls this morning was a project in Canada involving real estate, for example. So a really interesting range of not only asset classes, but also geographies. Probably leads to the question, why is there a picture of a horse on the screen? And indeed, why is there a horse behind Jeff and I here? So what we did back in November when we launched TOKO was we commissioned a piece of fine art. This is a piece of Chinese modern art. We commissioned this from an artist in Beijing called Wang Xiaobo, and a group of my partners here in Hong Kong acted as investors on this first product. So we acquired the painting. We then created digital representations of this. We fractionalized the painting into 16 tokens, and then had my partners all play the role of investors. They in fact did invest. Trying to get money out of 16 of my partners for a project like this was one of the biggest challenges of the project, but we managed to get there in the end. This next slide shows what we did with the fractionalization, and it's interesting because NFTs weren't really the buzz that they are today back when we did this in November. So we were kind of doing NFTs before they really got a lot of publicity. But what we wanted to do was show the way that the TOKO platform can create and use technology in different and interesting ways. So we actually created tokens that had identical economic interest. So each of the 16 tokens has a 1/16th ownership and a 1/16th entitlement to economic dividends, whether that's money we might make from renting out the painting in the interim or money we might make from selling the painting for a profit in the future. So same economic interest, but we actually took we took a high resolution photograph of the painting. We then broke that up into 16 different pieces and put a unique part of the picture onto each token. So these are real world asset, multiple tokens, but each of them is a non-fungible token. They are unique in that respect. Now, this was a little bit of an experiment, obviously, in terms of what we were trying to show the technology could do. What was fascinating to me was, as we did a lucky draw amongst my partners to see who got which token, and there was immediately a mini marketplace opened up. Even though these things are all worth the same, people started horse trading in terms of, forgive the pun, but I want this piece, I want the horse's head, I want a flower, I want some sky. And so there was almost instantaneously a marketplace opened up, which was a fascinating thing to watch, and really part of what we're doing in terms of trying to create unique ways of taking assets and creating individual and new products and new marketplaces associated with those products that people can buy and sell interests in. Now, it's a little bit of a tried example, obviously, in the case of me and 16 of my partners here in Hong Kong and one piece of art. But as you scale this thinking and these things that we learned from this into, let's take real estate, for example, where you could take a building, a large commercial building, maybe a residential complex, and you could tokenize that by having 100,000 tokens, each one representing a piece of the whole. Or you could create individual tokens, NFTs, that associate with individual assets within that complex. So one token could represent the top floor penthouse with a view of the harbour. Another could represent the one on the ground floor looking out the back. And obviously these things would then have different economic interests, different values, and people and the marketplace could again evolve around this. So it's a way of taking a real estate asset, fairly illiquid, fairly hard to participate in a fractional sense, and then creating a range of interests using tokenization to create individual products that are maybe individually linked to a specific apartment, and for people to then participate in and have that real connection between the asset that they're actually investing in and their interests in it. And this is where token technology is providing things that the market is telling us just doesn't exist today. And so that's been a really fascinating part of it. Jeff, did you want to maybe pick up, because this is a slide showing the custody integration that we provided.
So it's really interesting. Scott brought up the concept of experimentation. So back in November, it was quite new to us in terms of what TOKO could do, and then we were for a very long time really focusing on fungible tokens, and then trying to understand, okay, how do we take a non-fungible token? Because usually with a piece of art, you do a single piece of art, like a real world piece of art or a truly digital piece, and then you make that an NFT. But then in this case, we fractionalize one piece of art into multiple pieces. And I guess the concept of that is, yes, to experiment with potential different use cases and different asset classes. But the interesting thing is also for us to understand what the user experience would actually be like. So as we're running through and stress testing TOKO in the MVP phase, understanding what the proper happy path would be, so that we can make sure that we actually build the right features and sets to the different users potentially that would be in this ecosystem. And then we'll also cover that a little bit down the line as well in this presentation about the different players that actually come into the TOKO platform. From a user experience perspective, Scott was really adamant about making sure the partners really understood what they were getting, and this was one reason why we were experimenting with hardware wallets, so you can get something physical in your hand, but it's a digital token. Software wallets where you can visually see the piece of art represented by the actual fractionalized cutout, of that 1/16 of the actual piece itself, and then put into a custody solution that would be easy to access, easy to KYC properly and compliantly, without making the entire onboarding process too strenuous for potential investors. Really trying to avoid this becoming a difficult process for people to actually onboard and scale up on. So as you see here, we did an ad hoc direct integration with Hex Trust here in Hong Kong, one of our also strategic partners for TOKO. And specifically integrating the ability to receive this ERC-721 and then show it within the dashboard for the individual kind of, this was an overall TOKO view, but the individual investors would actually receive that individual piece across. So the integration was quite interesting at the time. We were playing with multiple different hardware and software wallets, as I said. But the next part will focus more about what we actually did as we migrated this to HTS, a token standard. But I want to cover one more thing in terms of from the integration perspective. So we did the ERC-721 direct integration back in November. We've since talked to Hex about doing the HTS integration, and now we're focusing on making sure that we have a path for custody integration moving forward for TOKO into this year.
Okay, so on the next slide, we touched briefly on that journey we've then been on. Obviously, when we did this, when we launched TOKO and did that first tokenization of our painting here, there was no HTS. It hadn't been launched yet. So we did use an ERC-721 format, and we did deploy that onto Ethereum. And but we always had an eye on what next and how we would be able to leverage Hedera native tokens. Obviously, within TOKO, we leverage the consensus service throughout. So from the outset, when we built TOKO, all of these assets, even assets deployed on the Ethereum network or indeed any other network, still leverage the AVFT level consensus of the HTS service, which is an essential part of the kind of enterprise nature of what we're offering our client base. But the HTS journey, which is something we'll delve into a little bit now. Obviously, they launched, the Hedera team launched HTS, which was fantastic earlier this year. We rapidly did an integration of HTS. We knew it was coming, so we were kind of ready for it. But there was obviously a flurry of activity to make sure that we could mint Hedera native tokens out of TOKO in short order, which we did, I think, within 2 or 3 weeks of HTS launch.
I actually want to, sorry to interrupt, just chime in here. So when we actually got all of the information, the white paper, et cetera, and all the technical documents, during our PI planning, we actually created an epic for it, thinking that it was going to take a considerable amount of effort to actually integrate. But it was actually pretty straightforward and ended up being more of a feature enhancement, to be honest. So kudos to Hedera for making that so easy for us.
Yeah, and some of the as we've now started to implement projects, and what with HTS now being available and built into TOKO, we have in fact re-tokenized the same painting using a HTS token, and part of this is around identifying the features and of Hedera versus, say, an Ethereum deployed token, and the advantages it's going to bring to not only our clients but indeed all the participants in this ecosystem. So cost is a big one. So we did a re-tokenization using HTS yesterday. Same 16 tokens. I think it cost just over 1 HBAR. I think Jeff, you said
1.1 HBAR.
1.1 HBAR to do the deployment. And remember, this is not only this is the deployment of individual NFT tokens, so there are 16 unique tokens. When we did the Ethereum deployment, same deployment effectively, but on Ethereum back in November, it was around
$168.
$168 to do that, and that was when the Ether price was
450 something.
450 something.
450, 460.
And so at today's price, if we were looking to do the same deployment, it would be around $800 odd.
I think $870 some dollars. 870.
There you go. Yeah. So very quickly, you can see that the scaling of costs for this, and this is this is a single asset. It's only 16 tokens, and so there is a question as we're talking to clients about what their ambitions are for creating digital assets. That if this isn't highly efficient and scalable, then we're rapidly going to run into, well, wouldn't it? Aren't we killing the value in trying to use digital to solve the tokenization problems and financing problems here? if we have such an expensive public network. So cost is obviously going to be key, particularly as this thing scales. Performance is another one, and again, we've seen issues with the Ethereum network and indeed other public chain networks where network traffic, new dApps that get deployed, CryptoKitties pretty much ground Ethereum to a halt for a couple of days, and that's kind of okay for certain applications running on those networks. But if you're trying to run large scale, multi-$100 million pieces of real estate and effective capital markets where people need to be able to trade very rapidly, to be able to liquidate their positions very rapidly, it's just not going to be a viable option to have the uncertainty of network scalability. So it's really critical to the types of clients and use cases we're working on that the network can scale, and we're not going to hit glass ceiling in terms of TPS and functionality and throughput. Finality is another obviously key feature of HCS linked to the HTS token. So the ability to actually, validate that, yes, this is a finalized transaction in a matter of, 2 to 3 seconds, which is kind of the performance we're seeing with the deployment and then subsequent transfer of tokens. We can see that finality happening in 2 to 3 seconds. Again, with an Ethereum or other blockchain networks, what we see is this uncertainty about when can I be comfortable that the transaction has actually gone through and is sufficiently buried within the chain of blocks that I'm comfortable that it's final. And again, these are issues that as we move into high-speed, enterprise-grade digital capital markets functioning in real time, they're going to be essential features. And again, these are some of the things we looked at when we were exploring, why partner with Hedera, why join their governing council many years ago. And TOKO now is leveraging the benefits of those decisions around the technology stack that we've put together. Brady already in the introduction mentioned the forking issue, huge issue in the context of what we're trying to do around these real world assets. The idea that, from a cryptocurrency that on a network that forked, it's okay because now I own 2 cryptocurrencies and they might have independent pricing, but I've now got 2 things and both of them are perfectly valid. That is not going to be acceptable in the context of I've got a list of owners of a real world asset. If I said to my partners here, and this is a tried example, but you scale this up, oh, by the way, the network on which we deployed this is forked. There are now 2 different versions of who owns the painting you put real money into and 2 different versions of who owns the profits associated with when we sell the painting. It's going to be a huge problem. So the no forking guarantee that comes with the structure of the Hedera tech is an essential feature that we've built into TOKO.
Yeah, I think on the back of that too, one of the key value propositions of TOKO is the assurance and guarantee backed by DLA Piper. And of course, forking potentially not that possible these days, given the nature of the scale of the Ethereum network. However, the potential risk is there. I think from an enterprise perspective and from a corporate perspective, these are the things that are probably more essential. Is from a legal perspective, the potential risk of it happening, and therefore to have the assurance that we're working with a platform and layer 1 that can guarantee the scalability and all these different consistent features is actually key for us.
Okay, did you want to talk, Jeff, just some about some of the?
So I think now maybe we can deep dive a little bit into actually what we did yesterday for the replatforming. One of the interesting use cases for interoperability and replatforming that we've seen since HTS launched. A lot of the potential clients are interested maybe starting in Ethereum and then eventually shifting over to HTS once we have things like scheduled transactions and other features actually ready to go. But I think also it builds a really interesting use case as people who are already along the tokenization journey. Maybe they've started in the current platform, but want to come to DLA Piper and see if we can actually add value in that way to give you the assurance, et cetera. That's something we can actually have a process of doing. And so it ends up being a really interesting use case for us to actually capture additional opportunities in terms of helping people along the tokenization journey. So it doesn't have to be a greenfield fresh start. You can come to TOKO with an existing kind of process and figure out how to actually work together on that. So what do we actually do? So you see on the screen, yesterday we deployed 16 tokens on mainnet. And what we did was, because we had a picture actually tied to the 721, what we did here is we actually put a topic ID and then embedded the I guess the metadata and some of the artwork details in hexadecimal code. And then what we can do is actually go into that token itself and identify the code, and then extract it back to string, and then you'll see all of the information specifically discretely related to that piece of art, or specific to that piece of artwork. So it's actually quite interesting. It was really easy to do. It was very fast. Of course, we did it more than once because we wanted to try different ways of actually deploying it. We were testing different ways within our operator account and how to handle the private keys. All of it went relatively smooth. It's just different ways of testing our solution. So later on, I can show, if we have time, what the TOKO platform actually looks like when we actually did it. So the audience here can actually get a look and feel of what the flow actually is. Michelle, could you open up the link? I just want to show the team a little bit quickly. Yeah, so I mean, once we get into here, basically what I've done is I've actually taken the transaction ID and got into, I'm going to copy the code 1 second, and then just put it into here, and then run it. You see it's basically number 81, which is this piece of art right here, and then all of the token attributes tied in here. So really real world practical implementation of this. I mean, it works, it's nice. It was fast, easy, scalable, cheap. And I mean, really looking forward to doing more of these kind of replatforming opportunities, as well as direct token issuances on HDS. So probably go back.
Go back to the.
Yeah, and then the last thing probably like on that I want to cover is the fees. I think we talked about the fees, right? The cost itself.
We did, yeah. It was obviously a lot more efficient.
Yeah, you see in the bottom right corner. I think total was like what was it, 111 million tiny H bar, which would be like 1.1 H bar. Yeah. For this actual issuance, and as well as putting the topic ID in. So overall, definitely much more scalable, and something that we can do easily.
Okay, let's go on the next one.
Yeah, this goes back to verify. You know, yesterday we just did a calculation. It would have been $871 at exact time that we did our replatforming.
30 cents versus $871.
Pretty much, yeah.
And scale that up. I mean, that's, this is one project, but scale this up to the types of marketplaces that we're looking to build for clients. And a lot of our clients aren't just coming with single assets; they're looking at building entire ecosystems, marketplaces of assets, including in the art. We're working with an art auction house here in Hong Kong who's looking to build a digitized, fractionalized art marketplace for an entire warehouse full of art that they have under management, for example. Okay, conscious of time, let's roll to the next slide. So just some of the features. Obviously, one of the reasons we've built TOKO is to solve some of the inefficiencies we see in existing capital markets, with high barriers and cost to entry, high transaction fees, limited market participants and access to the buy side, limited trading hours. Stock exchanges work a few hours a day when local banks allow them to, versus crypto exchanges, which can operate 24/7. And long clearing and settlement times, as opposed to settlement happening near instantaneously along with finality. These are the problems that we're seeing. So the TOKO solution has been designed specifically to solve this problem and to try and recreate the type of liquidity and flexibility that we see in cryptocurrency markets, but for real-world asset-backed tokens. So it's an enterprise grade. It's been built with compliance in mind. It allows fractionalization of real-world assets and unique product development. It has smart contract functionality, or now the ability to deploy directly onto HTS. This should drive, liquidity in terms of people being able to not only acquire and trade in these assets, but also having access to information in real time. So we're baking in a lot of the information that currently would be involved in, expensive, time-consuming due diligence processes that are set up after the fact. we're building tokens that have all of the information you'd ever need to know about that asset from day one built into that token in terms of the information, the hashing of documentations, contracts, other information about it. And then in real time, as people manage these assets, to increasingly add that information so that the entire portfolio of information about an asset is going to be available at any time by secondary market investors as well. We're looking at global. This is going to be a marketplace that transcends borders. Regulators across the world are in I would describe as a kind of a race now to try and build digital asset frameworks to enable their location to become leaders in this space. So we are seeing rapid development of the regulatory support for this ecosystem. And what's going to happen is these assets are going to move. I see some of the questions already that are coming in, and we'll come back to those at the end, are asking about, what about if my investors are in a different place to my asset? These are exactly the types of deals we're working on. And obviously at DLA Piper, being a global firm, we're able to then support with local law issues as you start dealing with asset here, issuer there, investor over here, and then wanting to try and access marketplaces and exchanges in different locations as well. So it is truly a global opportunity. We see that this being the breaking down of a lot of those sort of national barriers that exist as well in the current marketplaces. And what we've built is absolute, end-to-end, compliance. We're worrying about data privacy rules. We're worried about European GDPR. We're concerned about confidentiality. We're concerned about securities law compliance. We're concerned about, misrepresentation issues. So we've built kind of all of those legal issues that we know are associated with financial services products now into this technology solution. So just quickly looking at some of the advantages for our three different personas here. The asset owners, more liquidity, risk spreading, the ability to create unique products. And I think this is going to be a really exciting one. We're talking about the democratization of financial services here, which is going to be about putting in the hands of asset owners the ability to create products that they think the market wants, and for the market to react to that in a way that just doesn't exist today. In doing that, they'll be able to access, new markets, new people who want to invest, people looking for yield in alternative asset classes. So it will create new funding sources as compared to the existing financial services ecosystem. Transactional and operational costs will be significantly reduced, as we've talked about. We're particularly excited about the efficiencies that Hedera brings and the way that HTS and HCS integrate in a very low cost, high performance way. Borderless and faster settlement. These are kind of what the things that asset owners are looking for. For investors, they're looking for low barriers to entry. They're looking for automated AML KYC to onboard. They're looking for things that are less volatile than cryptocurrencies potentially. Like people like trading in cryptocurrencies in part because of the volatility, but we're seeing more and more people coming to us saying, well, is there something else in digital, but is a bit more real than a cryptocurrency, which I can't quite work out what it is? How do I actually participate in a digital marketplace, but for other asset classes, whether it's art, real estate, wine, whatever it might be. Highly efficient trading and therefore liquidity, smart contract functionality that gives them certainty of their rights and the ability to access and see what their rights are in real time, and single asset exposure, which again I think is really, really interesting when people can actually buy a single asset as opposed to maybe invest in a fund or a REIT or something else, which is really quite a remote and dispassionate kind of investment strategy. I think what we're going to see with the development of this ecosystem is the ability to bring an investor and an asset together in a fractional way. It brings that real connection between the two. For ecosystem participants, these are the broker dealers, custodians, exchanges, etc. TOKO offers tokenization as a service you can leverage. For a custodian that isn't a digital native but now wants to go digital, they can leverage TOKO to effectively leapfrog and participate in digital as a service by leveraging our technology as an outsourced service provider effectively. The integration of the personas, whether you're a custodian or a broker or an exchange, that's all been built into TOKO as well to allow that seamless interface, either through API connectivity or indeed just by pulling data out through those API into your own systems as well. That'll facilitate data services, asset management, and custom reporting as well, and access to multi-jurisdictional distribution of these assets. Very conscious of time. Brady, are we supposed to be throwing to Q&A now, or do we have a few more minutes before we go to Q&A? Just to time check on this.
We've got a few more minutes. You guys can keep going for a bit.
Okay, great, because we've got some more slides. Okay.
Yeah, great. I think I'll try to cover the architecture quickly and concisely. So there's TOKO application, the front end application, and the TOKO backend. So the front end application hosted on Azure, it's actually uses many different open source components as well. Some of our functions in terms of voting and also notifications, et cetera, are non-Azure components on AWS. So that's the infrastructure stack. And we're actually based in West Germany, which is the most stringent GDPR data region because of GDPR compliance and other PII compliance. And so with all of these things in mind from a regulatory compliance perspective, also the fact that we have multiple different personas that will be interfacing either through direct integration or consuming our API just for data services. We needed something that was flexible enough to handle all of these different permissions as well as data usage and also flows within our business process and token lifecycle. And so, Scott team and Luther as well as BCW, we all kind of came together and designed something that worked from a hybrid perspective. And so we're leveraging HCS to be that trusted component where we can actually outsource a lot of the consensus with the governance as well as the surety from Hedera plugged into a lot of the business rules that we built into Hyperledger Fabric. Specifically with the whitelisting and then how some of the private data actually flows in to mask some of the information that potential sensitive clients would not like to see or to be public on the blockchain, as well as give the various different automations and workflows so we can actually move along the path so that different people within our ecosystem can actually join at different tiers of membership from a business model perspective. And so that's the reason why we've actually opted for this HLF and HCS kind of a hybrid architecture. Now, from the actual deployment of the token itself, that's completely agnostic. And the idea for that is the more the merrier, right? But specifically, let's choose a platform that makes sense for us to scale. And this is where HCS became kind of our primary focus in terms of future issuances. Should really be focused on the HCS platform because it gives us all of the KYC and then scheduled transactions. A few other features that we have in there in terms of multi-sig, et cetera, plugged into the token itself without having to deploy a separate smart contract. Now, we can still deploy more complicated smart contracts because I think that's definitely necessary with some of the asset classes that we have. But the fact that we have this kind of tiering in terms of membership tiering and ecosystem partnership tiering within our business model structure, within our actually private and public permission architecture, and also from the issuance side, we have the flexibility to go and make sure that we're actually addressing value and capturing value for all of the different people downstream. So I'll pass it back to the team here. We have
did you? I mean, maybe we just show a couple of the slides.
Yeah, exactly.
So show people what TOKO looks like.
Time check. Okay, yeah. So if people are interested in what TOKO actually looks like what's the face of TOKO? I think we have like 2 or 3 slides that we've captured from the actual replatforming process. So this is TOKO. I mean, you come in, it's usually like a dashboard landing page, but we've dove straight into token creation. And here, you see, usually there's a drop-down menu. We can choose different token standards. We've chosen HCS non-fungible, and then done the RPs. Next slide, please. So we go in and then we put a few things specifically specific to DLA Piper.
And this is this example behind us. So these are some of the data fields we put in, and we've built templates for different asset classes. This is obviously the template for a piece of fine art, but there are other templates already built for other different asset classes.
Exactly. So here you'll see like basically the metadata that we kind of put in hexadecimal format here populated in the asset description. We have something called the matter number, which is very interesting, and I think this is really good for understanding how we integrate back with the DLA Piper systems. And so the matter number is something that DLA uses to track engagements. And so we've integrated many different components, and we have other partners that we'll cover a little bit later, like the International Token Standard Association. We've integrated an ITIN number to kind of guarantee the type of token that it is. We also have a FAFT integration potentially coming on soon. All of these different things come into the platform and actually have discrete API consumption apparatuses. So next please. And this is just the final stage, just filling out all the different other asset attributes. Now,
these are some of the some of the fields that help build the tokenomics.
Exactly. It's quite interesting because some of this information will go into HLF, Hyperledger Fabric, and some will go directly to the public chain. So it's very interesting that you see we've been able to open up different layers and levels of permissioned data capture so that we can actually have all the information stored properly and securely and compliant in a compliant way with our data protection, data sovereignty, data governance, data residency requirements, and the PII requirements, as well as having the flexibility to go onto multiple different public chain platforms. So, yeah.
One last slide before we throw to questions. So just this is a little bit of so where we're at and what's next. Obviously, we've probably already talked about the TOKO replatforming, and that was future state until yesterday when we replatformed this particular asset. So we've now got that built in. There is, and Jeff briefly mentioned ITSA, so the International Token Standardization Association, which issues ITIN numbers, which is kind of enterprise verification of a particular token and the categorization of it. So we're working with ITSA in Germany and we've built that into TOKO. So as you generate a token, you can either request or allocate an ITIN number directly to that asset, which will help with enterprise adoption and recognition of the token and the proper categorization of it within the appropriate standards. FATF compliance, these are the AML KYC rules that are coming down globally. They're being implemented at national level, but this is effectively a global movement to manage AML KYC requirements for all crypto assets, including cryptocurrencies, which is now very much happening on a global basis. We are building FATF compliance in DLA, and BCW are participating in one of the new technologies that solves FATF compliance, the Shift network. We'll be running a Shift node when that network goes live in the next few days. And we will be building that into the way TOKO operates. And again, from an enterprise perspective, in terms of I'm worried about AML, KYC type issues, we are as well. And we've been thinking about that deeply in terms of the way we've built the architecture of TOKO. One thing in the middle, and this really is a future state, but a very exciting one, is around this Global Governance Council. I've had the privilege of sitting on the Hedera Governing Council, and being an early member, I've been able to sort of be involved in some of the conversations about the formation of that council and the members that are on there. We're actually looking to leverage some of that multidisciplinary ideology to help build a council of these ecosystem partners to really grow this ecosystem. Because DLA Piper and TOKO is part of that ecosystem, but we do need global prime brokers. We do need global custodian providers. We do need exchanges, whether domestic or multinational exchanges, in which these assets need to move. So we're now in the process of building a global governance council. The exact details of which are very much still formative, but it's an ambition to partner with others from around the industry to build a truly end-to-end solution for our clients, because it's quite a complex solution at the moment for them to patch together.
Yep.
I'm going to pause there and throw to questions, including because I see lots of really interesting questions coming in. Yep. Brady, how did you want to handle questions? Did you want to run those, or should we just start at the top? Or
yeah, happy to start going through these and feeding you guys questions, and then you can answer them to the audience.
Yep.
For anyone who has questions, we've got the Q&A box at the bottom, so feel free to start asking away. So we'll jump in and do the first one here from Brendan. Is DLA integrating TOKO globally? I'm interested in tokenizing real estate in Canada and wondering if DLA reps in Canada would be able to help build products for them. Is there like an open beta or something that someone could do with TOKO?
Yeah, it's a great question. The first call I had this morning was with one of my partners in Toronto about Canadian real estate tokenization. So yeah, absolutely, TOKO is a global product. We're building it as part of the DLA Piper global network. We are able to support with all of those issues, whether it's securities law issues, obviously structuring the deals. We're actively looking at real estate in Canada as recently as about 2 hours ago. Absolutely is the answer. Some of what we're seeing with clients is they're looking to leverage, because they want to build their own kind of ecosystem or their own marketplace or their own portfolio of products. That's certainly something we're open to as well. That's kind of the TOKO as a service offering, where we can effectively be your outsourced service provider to help manage that while you run a run the shop front, if you like, and pull the assets in and manage that. There are obviously regulatory issues that need to be sorted. You need to have regulated activities done by regulated parties, but we can help with that integration as well. So absolutely, that is exactly what that type of example is exactly what we're already looking at, and very much what we've intended to build here.
Awesome. This person's interested in tokenizing inventory for an equipment rental business with revenue shared between token holders. And the question is around whether those tokens may be considered securities that would be regulated. Is that something that you can do on the TOKO platform?
There's two separate questions here. From a technology perspective, absolutely you can do it on the TOKO platform. There's no issue. And in fact, the TOKO platform, it doesn't think about the world like the SEC does. It creates digital assets, and we can bundle the rights associated with those assets into the smart contract or into the token. And that's irrespective of what the laws and the regulators in a particular market might say. So from a technology perspective, it's actually completely agnostic in terms of whether or not it is regulated. Obviously, the question as to whether or not this particular asset is regulated is a hugely important question, and you don't want to get it wrong, particularly in the US, where you have I think it's fair to say, a fairly active regulator in this space. So the US is a tricky market, is one of the most, it's the market where I think it's most difficult to structure an offering as a non-regulated security product. In a lot of other parts of the world, we're working on one in Hong Kong at the moment. It is very much possible to structure, particularly, you've got to get into the detail of what the rights are, but when you start talking about what is the token, and does it meet the definition of security or collective investment scheme or other financial services definition in different markets, you've really got to get down to the nitty gritty. What I would say, so it's hard to answer that question in general. In many markets, well, you are able to structure these things as an unregulated offering still, or you can do it as a regulated offering, but structure it in a way that makes it a more simple offering to do in terms of the level of disclosures and information. And again, by limiting your investors to professional investors, etc., you can make the path easier. But these are exactly the types of issues we're talking to clients about at the moment in terms of what do they want to achieve, what's their options for a route to market, which of those options looks most suitable in terms of pain, admin, compliance, and cost associated with that. And sometimes there's a fit, and sometimes there isn't. For smaller projects, it can be difficult if you can't avoid regulation, but it very much depends on the nuances of the deal.
And we have a few questions around fractionalization of NFTs. That's been a popular topic lately. Yeah, could you talk a little bit about that?
Yeah, if you fractionalize an NFT, there's a good chance it's no longer an unregulated asset. NFTs, one token, one asset. A lot of what we're seeing is one token, one digital asset, one owner, one ownership, digital representation ownership of one digital asset. That's not an investment product. It's not a regulated security. Typically, there are obviously some details. As soon as you start fractionalizing it, it suddenly starts to look like a collective investment scheme, a security, you're pooling monies together and giving it to someone. There are ways and means, and we've actually, when we first tokenized this painting in Hong Kong, and there was no way of issuing a security token, we had to be very careful in our structuring, and this is exactly what we looked at in terms of we fractionalized it. But then we created all these rules, and every token owner actually has day-to-day management rights. I actually have photographs of my partners having board meetings in case the SFC, a regulator here in Hong Kong, ever comes knocking, for example. So we structured it very, very carefully to avoid this question. But yeah, I think we're going to see a lot of people going, well, wouldn't it be cool if our NFT, we now broke it up and had multiple people? And if they don't think about, well, you're suddenly moving into a very heavily regulated area in doing that, I think we're going to see some people get that wrong, because it's not hard to do technologically. But it is certainly a very different, set of regulations, and these are criminal offences if you start buying, selling, and promoting regulated security products and you don't have a license to do so. So it's a really great question, and one where I think we're going to see some mistakes made just because people are excited about what could be done versus what the SEC might allow you to do.
Thanks. Yeah, that makes sense. We're getting a lot of questions around the production version of TOKO, and if there's a release date or if someone could go and try out the platform. Is that coming soon, or what stage of development is TOKO in right now?
So it is fully functioning for projects now, and as you can see, we've done a we've done a replatforming of our painting yesterday. The MVP release date, I'm looking at Jeff here because it's imminent, but I don't want to say the wrong date. I think we're talking a couple of weeks though.
Yeah, it's beginning of Q3.
Okay. So it's imminent in terms of full functionality for clients or people who are interested in doing this. We can already do projects, and we can provide demos for clients that there are multiple clients that we're talking to that we're already providing demos of the live system. We're already sitting with clients and doing test tokenizations with them as they move towards building out a particular fundraising or financing of an individual asset. So it's basically ready, but the fully kind of, can you just log on to a URL, go onto a website now and play with it? That's probably Q3.
Yeah.
Cool. And speaking of the website, some questions around if there's a place that folks can go to learn more information about project updates or news about the development of TOKO.
That's a great question.
It is a great question. Because of the nature of the channeling, and this actually goes back to the Q3 question, right? Let me just clarify. So the way that clients for DLA Piper onboard, there's a DLA Piper onboarding process. Now, there's a TOKO portal for those clients. So the users who would use that portal, of course, would have to go through the structuring, and then by that time would be interfacing with the TOKO platform. That's what I'm saying. Even if you came in today to start doing a tokenization, through the legal structure and the consulting, you probably wouldn't start tokenizing until Q3. I mean, if you started today, that's what I mean.
Yeah, these are not simple projects to put together.
Exactly.
And structuring the rights, structuring the underlying legal, where's the asset, who's the owner, are we going to have a holdco, who's issuing the token, is the token a debt token, is it equity, what are the rights associated with it, what are the tax implications, what's the most tax efficient structure of doing that. All of that actually takes a little bit of time, and then working up a proposal, a mini prospectus document to start then looking for buy-side interest and matching that up with the appropriate broker dealers is actually quite a process. So I think a real world large scale asset tokenization, I think 3 months is a minimum kind of 3 to 4 months is probably a minimum time frame to do these projects at this point in time, just because of the complexity of all of those pieces.
Exactly. But let's say, assuming you have everything in order, you have your structuring, everything done. Our target to have a functioning platform is pretty much by the end of May, in terms of our MVP schedule, to switch to a go live version of TOKO. So
and once all that work's done, actually the minting of a token is pretty quick forward.
Yeah,
We're talking minutes here. 10 minutes, and once you've got all the answers to the questions and we've worked out what you want to do, we've worked out that people want to buy it, actually then deploying the technology and interfacing with the brokers is really very, very simple.
Exactly. And issuance, creation and issuance is only one phase of the entire life cycle. I mean, there's multiple different downstream pieces that the TOKO platform actually encompasses. So to look at it from a holistic token lifecycle, all the way from issuance to redemption, all of the activities in between, and the various different personas that actually interface with that token, and how it goes back to the asset owner and back to the broker dealer, back to the investor, etc. That is a very long process, and just want to let everyone know on the call, it's not just I want to mint and create a token. That's it. There's many things downstream that we need to keep in consideration as well. Yeah.
Awesome. And we've got just a few minutes left, so I think maybe we'll take 2 more questions if that sounds good.
Sure.
So the first one is around use cases beyond finance. Are there any other use cases that the team is working on?
I think you can cover this one.
Yeah, I mean, there's quite a range of interesting things bubbling along. We're looking at. I'm pausing slightly because I need to be sensitive to confidentiality concerns, but we are working with a mining rights company that has various rights to deposits of certain minerals, and effectively tokenizing the entitlement to those assets as and when they are subsequently dug up, and in one case they're under the sea, so it's a complex extraction process, and the financing is being used to help with regulatory approvals and also obviously the associated mining infrastructure. So it's kind of a project financing with the future, with the tokens representing future discounted access to the underlying commodity, for example. We're working with a large scale music rights holder. So this is someone who owns a large back catalogue of music rights to start leveraging, those rights and tokenizing them and selling them. And that's potentially an NFT, individual project. I won't go into more detail because it's quite proprietary, but it's a very interesting use case around that. We're talking to someone with an intellectual property rights portfolio. So these are trademarks, patents, and other intangible assets associated with their business, and the tokenization of those and the commercialization of those assets by having people come in and participating in a fractional sense in that portfolio. So a real mix of things where we're talking to commodities holders and collectibles holders. So again, I'm trying to be vague here deliberately. So
yeah, there's also some opportunities related to IoT data and around some of that consumption, basically tying it back to the physical item.
Yeah, that's a relatively new use case where there's a kind of a supply chain with IoT functionality built in it, but then using tokens to effectively track through the individual products, capture information about the product, allow more streamlined supply chain, but baking together the early use case for blockchain. One of the early use cases really was, supply chain or provenance type verification, but now using tokens to capture not only that information, but also ownership information through that supply chain, so that you can build in things like trade finance, risk and title transfers and things, and record that all on the blockchain at the same time. So
exactly.
that's another one.
Moving from logistics into the commercialization of on the retail B2C side.
And one more I'll mention, which is personally I'm super excited about, but it's relatively nascent, our conversations with partners at this point in time. But hoping to have these conversations as well as part of the Hedera Council kind of multi-party discussions that we have in the council, is around ESG and carbon credits in particular. That the world has not got a functioning global carbon credit trading system by any means. National governments have, frankly, let us down globally on that basis. The idea of being able to create an effective tokenized carbon credit system that can operate cross borders, kind of irrespective of the inefficiencies of nation-state approach to these issues, is one that I think would be just super exciting. It's very nascent in our conversations about this, but to me that would be the sort of real game-changing kind of application for TOKO, to actually look at the way in which we can help manage the issue around climate change by tokenizing and getting above and beyond national interests.
That's great. And we've seen a lot of number of sort of carbon credit projects that have popped up recently too on Hedera. That seems to be a very popular project type recently. One of them being the Dovu platform that's available as well. Well, we're just at time now, so I appreciate everyone joining today, and Scott and Jeff for joining and sharing all of this information about the TOKO platform and how they're using Hedera Consensus Service and Hedera Token Service. We actually have more by TOKO coming up later in the week on April 29th. Everybody will receive an email with a link to register for the upcoming Hedera user group. And in the Hedera user group workshop meeting, we'll have Scott's counterpart, Andy, the CIO at DLA Piper, doing a presentation as well. So more TOKO information coming on the way. But Scott and Jeff, really appreciate your presentation today and sharing as much as you did.
Thanks, Brady. And there are a lot of other questions I can see coming through that we didn't get to. I assume we'll have an opportunity to maybe send some responses to those, because there's some great questions. And the good news is the answer is generally yes to all these questions. Can TOKO do it? The answer is generally yes, but I do want to come back on that. They're great questions there.
Awesome.
It's good to see
questions first.
If you did have a question that you needed answered and we weren't able to get to it, that's a great point. You can reach out to me directly, actually, Brady at hedera.com, and happy to pass those along and get your questions answered. And please join us also on April 29th.